Good morning, I'm Rashan Gidwani, and you're watching the Daily Morning Note. It's Friday, the 6th of January, 2023. Singapore stocks recorded their first day of gains in this new year amid a rally across regional markets. The Straits Times Index climbed 1.6%, or 50.2 points to 3,292.66. Singapore's retail sales rose 6.2% on the year in November, continuing from the previous month's 10.3% growth, Department of Statistics data showed on Thursday. On a month-on-month, seasonally adjusted basis, retail sales were down 3.7%, reversing from the 0.1% growth charted in October. The cutoff yield for Singapore's first six-month treasury bill auction this year closed at 4.2% on Thursday. The T-bills were around 2.6 times subscribed for the 4.7 billion Singapore dollar allotment in the latest auction. Non-competitive bids, which totaled 1.4 billion Singapore dollars in the latest auction, were fully allotted. Shengxiong Group announced that its subsidiary Shengxiong Supermarket entered into a lease agreement with Yunnan BU Real Estate on December 8, 2022 for a retail space of approximately 31,162 square feet in Kunming City, Yunnan Province, China. The new store is expected to be operational before the end of the second quarter of 2023. Lai Huat announced that its wholly owned subsidiary, HLH Agriculture, has terminated its joint venture agreement with HSC Group for the proposed exploration and mining of mineral resources at the Cambodia-Singapore Agriculture Hub. The group says that the process to secure regulatory approval is still under review by the relevant authorities in Cambodia. Keppel Offshore and Marine, or Keppel O&M, has secured a contract from an international renewable energy company for the construction of an offshore substation worth $130 million. The contract was secured by Keppel O&M's wholly owned subsidiary, Keppel Fells Limited. The OSS will have a capacity of 600 MW and is scheduled to be completed in 2025. Solid U.S. hiring data translated into another round of interest rate angst on Thursday, with U.S. stocks ending sharply lower ahead of an upcoming government jobs report. Private employment bounced by 235,000 jobs in December, more than analysts expected. The data follows Federal Reserve meeting minutes released on Wednesday that continued to suggest a hard line on inflation after multiple interest rate hikes in 2022. The Dow Jones Industrial Average finished down 1.0% at 32,930.08. The broad-based S&P 500 shed 1.2% to 3,808.10, while the tech-rich Nasdaq Composite Index dropped 1.5% to 10,305.24. U.S. jobless claims fell in the final week in 2022, signaling continued historic tightness in the labor market. Initial jobless claims, a proxy for layoffs, fell by 19,000 to a seasonally adjusted 204,000 last week, the Labor Department said Thursday. Seasonally adjusted jobless claims figures tend to be volatile around holiday periods. Amazon.com Inc.'s layoffs will affect more than 18,000 employees, the highest reduction tally revealed in the past year at a major technology company. The layoffs are concentrated in the company's corporate ranks and represent roughly 5% of that element of its workforce and 1.2% of its overall tally of 1.5 million employees as of September, which will be made over the coming weeks. Phillip Security Research analyst Maximilian Kostoyo comments that the increased number of staff affected by the layoffs, about 80% more than Amazon's previous announcement of 10,000 in November, signals that the company is taking a more proactive action to rein in costs, while also preparing for continued slowing growth. The uncertain macroeconomic environment, with the Fed likely to continue raising rates throughout 2023, constitutes a strong basis for taking the more conservative stance. Tesla delivered 55,796 China-made electric vehicles in December, the lowest level in 5 months, according to data from the China Passenger Car Association on Thursday. That was a 44% drop from November and 21% fewer than a year earlier as the U.S. automaker reduced output and cut prices to deal with rising inventories amid weakening demand. Bed Bath & Beyond Inc. is preparing to file for bankruptcy within weeks after the home goods retailer came up short on sales during the critical holiday season. According to people with knowledge of the matter, the retailer is in the early stages of planning for a Chapter 11 bankruptcy filing, and the discussions could extend into February, these people said. That's all for today. For financial news, tune in weekdays at 8:30 a.m. live on YouTube and Facebook. Please like and subscribe for more. See you again and have a great day.